Commonwealth Bank profits are in, up 14%. Steve Bartholomew from Business Spectator. Good result?
Boringly good, Jackson. It's good across the board, really high quality numbers, but nothing kind of exciting in it. There's no big positives. There are some quite nice, strong divisional results, but no big negatives either. It's what we've come to expect from the CBA. It's very consistent, the progress is incremental, and the numbers are very clean.
What does the results say about the status of the economy at the moment?
It's one of the surprising things to me of the CBA's more recent performance is they actually have been generating top-line growth in an environment where demand for credit has been extremely weak. So both at the household level and for business, they've actually generated income growth, sort of mid-single digits, which is pretty respectable given where credit growth has been. So that's kind of impressive. I suppose the other aspect of that result, which one should focus on, is that their cost control has been really, really good. And they've been driving down the cost to income ratio progressively now for several years. And that's part of the reason why the results are actually quite robust. And also they've got, like the other banks, very clean credit quality, 16 basis points of loans and advances. I can't recall a major Australian bank with those sort of credit quality stats, and they're all moving that same direction. I think it's partly because they're not actually lending that much. If you don't have a lot of new lending, you're not going to generate a lot of new bad debts. So I suppose that's part of the explanation for it. But generally, this is a really robust, solid performance. And it says that the borrowers that they have, the existing borrowers, are actually in reasonably solid shape. Ian Narev, the CEO, did sound some sort of warning over the outlook, which is a little bit clouded, a little bit soft. But at the moment, if you look across the major banks, the credit quality that they're displaying says that the existing customer base is actually in reasonably good shape.
So we know they grew their home loan book, but business lending still remains soft. Is that a worrying sign that we're not seeing that borrowing amongst businesses in the economy?
Oh, it's been worrying since the crisis. Businesses stopped borrowing. To some degree earlier on, the banks stopped lending, but that's changed. The banks are actually trying to lend to business, but businesses have become very defensive and are still quite clearly worried about the external environment, whether it's the domestic environment or the international one. So businesses big and small have been paying down their debt. They're not borrowing more. They're sitting on cash. They're not investing. And with the resources investment boom now ending, we actually need to see some pickup in demand for credit from business. We need to see them borrowing, we need to see them investing, creating jobs and capacity.
But it's amazing that the banks want to give the money away, but businesses don't want to take it.
Traditionally, bank profit growth has been driven by volume growth. They've actually lent more. And pre-crisis, credit growth in the system was in the mid-teens, which was unsustainably high, one could argue. At the moment, it's in the low single digits. The banks would love to have that volume growth, because then it would offset what's been happening, which is continuing shrinkage or pressure at least on their net interest margins. For a system which the critics would say is not very competitive, net interest margins are actually back to where they were, in fact slightly lower in some respects, pre-crisis, where there was a lot more competitors. So the system actually is quite competitive because all the banks are trying to chase whatever volume there is available.
So where is the growth going to come from for CBA and the other banks?
Well, at the moment, CBA is getting top-line growth and they are getting market share growth. This means they're taking some share off some of their competitors. You've got to remember, the banks aren't just banks anymore too, they're financial services business. So CBA's wealth management business, which is a very large business, had a very, very good period, high double digits, high teens growth in earnings. So there are other avenues to growth than just the core banking businesses. But a lot of it's kind of introspective activity. It is about the efficiency with which they operate. They're all very focused on getting their costs down and down and down. They're all displacing what used to be people-dominated processes with technology. CBA spent nearly $600 million on investment this half, following billions of dollars over the recent years. So they're all putting a lot of money into their technology platforms to improve their efficiency, and it's showing up in reduced cost-to-income ratios. So in some respects, they'll get their growth by reducing their cost base, growth in profits by reducing their cost base. But in the long run, if you're going to continue to grow your profits, you've got to get some movement on that top line. and they're all hoping that those indicators that consumers and businesses are slightly more confident than they used to be will translate eventually into higher demand.
800,000 shareholders at Commonwealth Bank. Most of them all worry about the one thing. What's the dividends like?
Dividends up 12% relative to the same half the previous year. About 2 years ago, 18 months ago, CBA's board, I think in response to the sort of shareholder demands for more yield, more income, changed their payout ratio, lifted it to 70%. So as their profits rise, of course, they're showering their shareholders with dividend income and a pretty fancy share price. So I think the interesting thing about that reference that Ian Narev made to the Commonwealth Bank's 800,000 shareholders and millions of people who have an indirect interest in CBA through their super funds, that's a preemptive strike on the financial system inquiry. There are already calls from other people, competitors and consumer groups, for some sort of hobbling of the major banks, levies on their activities and so on, effectively super taxes on the banks. And you can see the majors will say, well, if you tax us hard, what you're really doing is taxing 800 million households in the case of CBA, and all those zillions of people who have an exposure through their super funds. So I think this year is going to be quite interesting because in some respects that result today was too good, as was the ANZ first quarter result yesterday, because it just incites people who believe the big banks gouge and are too profitable. As I said yesterday, they probably should have been stuffing some of these profits into higher logs and bringing them out next year after the system inquiry is finished.
Steve Bartholomew, thanks very much.
Thanks, Jackson.